Hello and welcome to this video on the importance of microinsurance for the low-income group. In today's world, financial insecurity is a major challenge, especially for low-income individuals and families. A sudden illness, accident, or natural disaster can easily wipe out their savings and push them further into poverty. This is where microinsurance comes in, providing an affordable and accessible way for the low-income group to manage financial risks. So, what is microinsurance? Microinsurance is a type of insurance designed for individuals and families with limited incomes who may not have access to traditional insurance products. It typically provides coverage for life, health, property, and other risks, and is sold in small amounts that are affordable for people with limited incomes. Microinsurance aims to protect low-income individuals and families from financial risks arising from unexpected events such as illness, accidents, natural disasters, and other related costs. Microinsurance has gained prominence in recent years as it provides an affordable and accessible way for the low-income group to manage financial risks. For many low-income individuals and families, a sudden illness, accident, or natural disaster can easily wipe out their savings and push them further into poverty. With microinsurance, they can receive financial support to cover medical expenses, loss of income, and other related costs, which can help reduce the impact of such events on their lives. One of the key features of microinsurance is its affordability. It's usually sold in small amounts that are affordable for people with limited incomes. Microinsurance premiums are typically lower than those of traditional insurance products, making it accessible to people who would otherwise be unable to afford insurance coverage. Additionally, microinsurance policies are usually designed to cover only specific risks, which helps to keep premiums low and affordable. Another feature of microinsurance is its accessibility. Microinsurance products are usually sold through community-based organizations, cooperatives, and microfinance institutions, which have a better understanding of the needs and circumstances of the low-income group. This helps to overcome the barriers to accessing traditional insurance products, such as lack of knowledge, trust, and documentation. Microinsurance also provides several benefits to the low-income group. First and foremost, it gives them peace of mind, knowing that they are protected from financial shocks. It also enables them to access better healthcare services and treatments, which they may not have been able to afford otherwise. Moreover, microinsurance can help stimulate economic growth by encouraging entrepreneurship and investment in small businesses. By providing a safety net for low-income individuals and families, microinsurance can help reduce poverty and promote financial inclusion. However, microinsurance also faces some challenges. One of the major challenges is the lack of awareness and education among the low-income group about the importance of insurance. Many people in this group are not familiar with insurance products and may not see the value in purchasing them. Additionally, the administrative costs of providing microinsurance can be high, which can make it difficult for insurers to offer affordable premiums. Now, you may be wondering why microinsurance is so important. Well, for starters, it helps protect the low-income group from financial shocks that can arise from unexpected events. For example, if a breadwinner of the family gets sick and cannot work, it can cause significant financial hardship for the family. With microinsurance, the family can receive financial support to cover medical expenses, loss of income, and other related costs. Microinsurance provides several benefits for the low-income group. Microinsurance is a type of insurance that provides coverage to low-income individuals and families who are often excluded from traditional insurance products. It is designed to be affordable, accessible, and customizable to meet the unique needs of the low-income group. Microinsurance is typically sold in small amounts, making it easier for low-income families to afford, and it covers a wide range of risks, including life, health, property, and other events. One of the significant benefits of microinsurance is that it provides financial security to low-income families. The low-income group is often vulnerable to financial shocks, such as illness, accidents, or natural disasters. These events can wipe out their savings and push them further into poverty. Microinsurance helps protect them from such financial shocks by providing financial support to cover the costs associated with these events. For example, if a family member falls ill and cannot work, microinsurance can provide financial support to cover medical expenses, loss of income, and other related costs. Microinsurance also enables low-income families to access better healthcare services. Often, low-income families do not have access to quality healthcare due to financial constraints. With microinsurance, they can afford to access better healthcare services and treatments. This not only improves their health outcomes, but also helps them to become more productive members of society. Microinsurance can also stimulate economic growth by encouraging entrepreneurship and investment in small businesses. With the financial security provided by microinsurance, low-income families are more likely to take risks and start their own businesses. This, in turn, creates jobs and contributes to the economic growth of the community. Moreover, microinsurance helps to reduce the burden on social welfare programs. In many countries, social welfare programs are often overstretched and unable to cater to the needs of the low-income group adequately. Microinsurance can help to reduce the burden on these programs by providing an alternative form of support. This, in turn, allows the government to focus on other critical social programs. Finally, microinsurance promotes financial inclusion. The low-income group is often excluded from traditional financial products, including insurance. Microinsurance provides an opportunity for them to access financial products and services that they may not have been able to afford otherwise. This promotes financial inclusion, which is critical for reducing poverty and promoting economic growth. While microinsurance has several benefits, it also faces some challenges. Microinsurance is an important tool that provides affordable insurance coverage to low-income individuals and families who may not have access to traditional insurance products. While microinsurance has several benefits, it also faces some significant challenges that need to be addressed. One of the major challenges of microinsurance is the lack of awareness and education among the low-income group about the importance of insurance. Many people in this group may not have the knowledge or understanding of insurance products and may not see the value in purchasing them. Insurance products are often seen as a luxury, and people may not prioritize them over other basic needs, such as food, shelter, and healthcare. As a result, it can be challenging to convince people to purchase microinsurance policies, even if they are affordable. Another challenge of microinsurance is the high administrative costs associated with providing these products. Insurers may face significant costs in setting up and managing microinsurance programs, such as hiring staff, establishing distribution channels, and developing marketing materials. These costs can make it difficult for insurers to offer affordable premiums, which can make it challenging for low-income individuals and families to purchase coverage. Additionally, insurers may face challenges in assessing risk and managing claims in the microinsurance market, since the low-income group may not have access to reliable income data or credit history. Insurers may find it difficult to determine the appropriate premium rates and coverage levels for these customers. Claims management can also be challenging, as insurers may face difficulties in verifying claims and assessing the true value of losses. These challenges can lead to higher costs and lower profitability for insurers, which can make it difficult for them to sustain microinsurance programs in the long term. Finally, microinsurance faces challenges related to regulatory environments and legal frameworks. In some countries, regulations may not be supportive of microinsurance programs, and insurers may face significant legal barriers to offering these products. Additionally, there may be cultural and social factors that affect the demand for microinsurance, such as a lack of trust in insurance companies or a preference for informal risk-sharing arrangements within communities. In conclusion, microinsurance is an essential tool for protecting the low-income group from financial risks. It helps provide financial security and access to better healthcare services, which are critical for improving their quality of life. However, it requires greater awareness and education among the low-income group about the importance of insurance. With the right support and initiatives, microinsurance can play a significant role in promoting financial inclusion and reducing poverty. Thank you for watching this video, and we hope you found it informative.